The Monetary Policy Committee (MPC) of the Reserve Bank of India slashed the short-term lending rate, or repo rate, by 25 basis points to 6% at its third bi-monthly policy review. Investors on Dalal Street gave thumbs down to the rate cut, as Sensex and Nifty came off their fresh lifetime highs hit in the early trade to end lower by around 0.30% on Wednesday. A poll conducted by ET among 20 market participants showed 17 of them have voted for a 25 basis points cut in repo rate, the rate at which high street lenders borrow short-term funds from the central bank, on Wednesday. The repo rate now stands at 6.25%. After rising 111 points in early trade, benchmark BSE Sensex pared all of the initial gains and settled 98.43 points, or 0.30%, down at 32,476.74. Likewise, NSE Nifty index retreated 33.15 points, or 0.33%, to 10,081.50. Must read today. What's on the shopping list of Rakesh Jumchanwala? 4D Street Aces Kochi Shipyard IPO sales through. Fully subscribed on day 2. India's retail inflation declined to a record low of 1.54% in June, raising expectations of an interest rate cut, with the government pushing the central bank hard to reduce lending rates. The 6-member Monetary Policy Committee (MPC) of RBI declared the bi-monthly policy on Wednesday. Hitesh Agrawal, EVP Head of Retail Research, Religious Securities, said we see a 25 basis points rate cut by RBI on Wednesday. We are positive on the entire auto pack coupled with select public sector banks such as SBI and private banks, including ICICI Bank and Yes Bank. Based on various brokerage recommendations, EtMarkets.com collated a list of rate-sensitive stocks that may benefit from today's rate cut. Recommended by Natasha Shankar, Senior Vice President and Head of Research, Yes Securities Dewan Housing Finance Corporation. The company is well capitalized to grow loan book in the housing finance space. The housing finance space in itself is expected to grow owing to the focus on affordable housing. The company has maintained stable net interest margins, NIMs, and asset quality, which is commendable, given the aggressive growth in the loan book. Grew Finance. The company has a strong presence in affordable housing space where it enjoys pricing power in spite of intense competition. It has been able to maintain one of the healthiest NIMs in this space through lower cost of funding. Housing and Urban Development Corporation (HUDCO). The company plays a key role in various government schemes to develop the Indian housing and urban infrastructure sectors. Its core business is to act as a wholesale financier, lending to state governments and their agencies, which in turn helps mitigate risk. The company has a strong track record and enjoys highest credit rating (LIC). Housing Finance. The company has been strengthening its core mortgage business. The government has announced various schemes for urban development which in the long term are expected to benefit the middle-class households, which has been the company's core area of focus. The recent correction in the stock price has made the valuations attractive from a long-term perspective. Recommended by Pankaj Pandey, Head of Research, ICICI Direct. Mangalam Cement pays an interest rate of 14% on a debt of 338.3 crore rupees. So every 1% decline in interest cost could add 3 crore rupees to the bottom line, around 5% of the PAT. At the current market price CMP of 379 rupees, the stock is trading at an attractive valuation of 6.0x FY19 EV/EBITDA and an EBITDA of $49. Hence, we have buy recommendation with a target price of 425 rupees per share, i.e. at 7.0x FY19 EV/EBITDA and EBITDA of $55. Housing Development Finance Corporation (HDFC). Given the rate cut, HDFC is likely to benefit from both cost of funds and business growth. With loan growth strong at 18%, ROE at 2.22.5% and ROE 20%, we have a buy with a target of 1,910 rupees. HDFC Life IPO is also a near-term upside trigger for HDFC. JK Tyre for FY17. JK Tyre's Industries' overall debt level stood at 5,376 crore rupees and with debt to equity at 2.6x. Thus, interest outgo stands as 440 crore rupees, constituting 39% of the overall operational profit for 1,132 crore rupees. Hence, we believe a 1% fall in interest rate will effectively save 54 crore rupees for JK Tyre, which is eventually around 14% of its current PAT. Overall, the company is expected to be a beneficiary of the secular CV radialization trend, where it enjoys leadership position market share of over 30% in domestic MHCV truck bus radial. The turnaround of its acquired Cavendish Industries is likely to improve its overall performance. Hence, we have buy recommendation on the stock with a target of 215 rupees per share. NCC Limited. NCC has a consolidated debt of 1,577 crore rupees with DER at 0.5 times. The company would benefit from rate cut as it would lead to significant reduction in interest outgo 395.7 crore rupees in FY17. We like NCC given its strong order book and a lean balance sheet, which will help it capture huge opportunities ahead. Sanjeev Jain, Associate Vice President, Equity Research, Ashika, Stockbroking SBI and PNB. State Bank of India SBI and Punjab National Bank PNB look good for long-term perspective. Government and RBI's focus on fast resolution on NPA issue along with improving macroeconomic environment and changing working culture in PSBs boosted our confidence on them. Valuations of these lenders are also looking attractive at present levels. One can invest in SBI, PNB and Bank of Baroda for long-term perspective. Mahindra The auto major has strong presence in rural sectors and the government focus in hinterland along with good monsoon will benefit the company going forward. Not to forget that has a strong presence in electric vehicles market and the government's plan of 100% electric vehicles by 2030 may bode well the company's business growth. The company's fundamentals are looking good. One can invest in the company for a long-term perspective. Ashok Leyland. We are positive on Ashok Leyland for long-term perspective. The company reported better than expected sales numbers for the month ended July 2017. Hinduja Group flagship Ashok Leyland posted a 14.19% rise in total sales at 11,981 units in July. The company had sold 10,492 units in the same month last year. Sales of medium and heavy commercial vehicles grew by 10.32% to 9,026 units as against 8,182 in the year-ago month, the company said in a statement. Light commercial vehicle sales rose 27.92% to 2,955 units compared to 2,310 in July last year. The auto firm has plans to launch new models in the LCV segment in near term. Ashok Leyland's business will continue to grow going forward. Views and recommendations given in this section are the analyst's own and do not represent those of etmarkets.com. Please consult your financial advisor before taking any position in the stocks mentioned.